Good morning, everybody. It is Wednesday, May 29th, 8:47 a.m. Welcome back to another episode of The Market Open. We are here once again. Thank you all for being here this morning. Really interesting past 24 hours. We've got a lot to talk about. I think one of the biggest headlines that we'll get into is Robinhood. Did not expect the news we got yesterday on the market close when we saw what we saw. For those that don't know, we had $1 billion buyback share authorization plan that came out yesterday. And so we've got a lot of details on that. We're going to talk about it, a little bit of controversy around that. I think it's a good idea. We're going to talk about the bull, the bear case, why Robinhood is doing it. So we'll be discussing that. Nvidia, it's slightly down in the pre-market, but by slightly down, I mean 0.03%. So the market's like, yeah, we're not going to have that big of a green day for Nvidia in the pre-market, but it's $1,138.91 instead of $1,139. So Dow Jones is down a little bit. The S&P is down a little bit. The indices are down. They're a bit red, but the S&P is down like 1%. But Nvidia is not the reason for why it's down. It's other companies that the market is deciding to sell off. They're not going to sell off Nvidia. They're not going to get rid of their juicy Nvidia. They're going to get rid of other companies versus Nvidia. So we got to talk about that. And then also we have earnings today for a bunch of companies on the market close. We're going to have a lot to talk about. We're going to have C3 AI. We're going to have UiPath. We're going to have CRM, a bunch of different companies that are coming on, Salesforce, etc. So we've got to talk about that. This morning, we've so far had Abercrombie and Fitch, incredible year. Operating margins are up 700% year over year. They're up 4% right now in the pre-market. And I think we have a couple of other companies right now in the pre-market, but we did have Abercrombie. Oh, Dick's, I think we have that did well. Dick's, they raised guidance. They beat on EPS and they beat on revenue. Let me check the stock real quick. Dick's is, wow, they're up 7%. Okay, they're up 7% as well. So we got a lot to talk about, a lot to get into. Big day filled with earnings. It's Wednesday morning. Oh, and Chewy. We got to talk about Chewy as well. Chewy, I believe, did they do a buyback? They did something exciting. Yeah, $500 million buyback. There you go. The fact that companies of the capital like Robinhood and Chewy to do buybacks. I mean, that I think that is so bullish in this economy, that the fact that they have the capital to do that. So we got a lot to talk about and a lot to get into. Thank you, everybody, for being here. Let's get into it. Eric, General Weenus, Peter Girardi, I'm Beneficial, Player One, Zokol, Tony, Yeti, Sticky Monkey. Sticky Monkey says Amit's late because he's combing his hair. I'm sure. Literally, I wear a hat. That's like, I can't even be late for that reason. General Reed says if Amit isn't on in the next minute, I'm flipping a table. All right. Well, I'm here. Thank you for being here. Akshat, Chris, Tony, Mario, Daniel, BJ Ames, Robinhood. Yup, we'll talk about Robinhood's Hood Morning. I love it. Good morning. Good morning. Thank you for being here. Lena, Jing, Freddie's Lawn. What's up? What's up? What's up? Benny, June. Gosh, had to search for the link this morning. Couldn't get YouTube to suggest this show to me. YouTube is trying to not wake your ass up this morning, June. They wanted you to sleep in, but it's good because you did what you had to do to make sure you would wake up this morning. Deacon, what's up? Central California sends you a good morning amid. Deacon, thank you for being here. Really appreciate it. Jeremy, Damian, Carl. All right, so let's get started. I think we'll start off with the Robinhood news. We'll start off with that. We'll spend a good 7 to 8 minutes fleshing out this news because there's a lot of components to it. And then we're going to get into earnings, macro. We got Tom Lee, who has a bunch of new thoughts that I thought said some interesting stuff last night. And then we'll keep going from there. So let's start off with Robinhood. FIFA is down 40%. Oh, crap, dude. Faraday Future. Goodness gracious. Faraday Future. Wow. This is why it's kind of hard to be in these meme names. Holy crap. By the way, I had an argument about GameStop. I'm going to flesh it out later today as well about what I think they should do. I think I should be on the board of directors for GameStop. The idea actually picked up traction last night. You know, Matt Higgins, I don't know if you guys know him. I think he was like a former shark on Shark Tank. He ended up seeing the tweet yesterday, and he was like, yeah, this is a good idea. Dude, I really think my idea about what GameStop should do with the new cash, which is TLDR, they should buy some Bitcoin. I think Ryan Cohen needs to see that tweet, and I think we need to do it because I think it makes sense. Anyway, let's start with Robinhood. We'll explore that idea a little bit later as well and keep going into it. So Robinhood, $20.77 after hours, or in the pre-market, 1.47%. At one point, it was $21.99 yesterday. I think it's pulling back right now because the broader market is pulling back. So it should be at probably 4 to 5%. But, if the S&P is down almost 1%, down 0.7%, then Robinhood is going to take a little bit of a tumble. Makes sense for that to end up happening. Now, why is Robinhood up and why did they announce this buyback? So yesterday, Robinhood announces a $500 million, or it's not 500 million times two, $1 billion buyback, and no one expected it. Here's my quick reaction to it from the market close. For those that are not part of the market close gang, these are the moments you got to be at for these moments. So let me play 30 seconds of this. Was our raw reaction. This was me and about 950 people figuring this out in real time, and then we'll talk about the actual details of it.
With Robinhood is this 0.5%. What the hell is going on? Hold on, let me see if I can get some news. But I do think this makes sense for GameStop, dude. I think this makes a lot.
I was still ranting about my GameStop news
in the context of crypto by just adding Bitcoin to the balance sheet. I think it makes sense. Okay, what's going on with Robinhood? Let me see. I'm still waiting on Kava numbers, guys. I don't have it. Oh shit! Holy crap! Oh my god! Oh my god! Guys, no one said it in the comments. No one said it in the comments, so I get to break this news. You guys don't get to break this news.
Usually everyone will just spam in the comments the breaking news, and that's how I get it. But this time, this was so quick, no one figured out the news. So I was like, all right, I get to actually tell everybody. So it was fun.
I get to break it to you guys. You guys don't know. Robinhood, if this tweet is not wrong, has announced a 1 billion share buyback purchase agreement.
And then we spent like 2 minutes trying to figure out, is that tweet fake or is that tweet real? And obviously the tweet ended up being real. This was a really, really cool thing that Robinhood did. And the reason it was cool is because for a couple of reasons. So let me get into the bull case around why they did this. Number one, I think it is obvious that Robinhood is growing. And they're growing at a level that, in terms of 2024, the tailwinds that they have they're just monumental, right? They're just absolutely monumental. And because those tailwinds are monumental, and we'll talk about what those tailwinds are in a second and go through the list of them, I think they basically said, hey, we're going to make sure on any dip, there is no shot for the street to ignore what we've been able to do. And in order to facilitate making sure that we don't go back to $17 or $18, they're basically scaring the market. They're trying to say to the market, hey, like, we're good. We know we're good. Don't you dare for 1 second think that we deserve to go back to 16, 17, 18, because we will buy the crap out of our stock. At that point, they could buy 45 to 50 million shares with that full $1 billion. By the way, it starts in Q3, so they can start in November, and it goes for about 2 to 3 years. And they said in about 2 years, they think they're going to spend the entire money. So it might be 100 million this quarter, 250 million this quarter. It'll be at their discretion. But they are authorized to do it. They don't have to do it, and they have the ability to do whatever they want over the next 2 years. So I think they're basically telling the market, even if we have a crappy quarter, or even if the market falls, or even if, maybe crypto revenues aren't that good one quarter, and although we've had a phenomenal year, you want to get super rational like they did in November 2023 when they tanked Robinhood to $7 just because, they missed on a couple of metrics here and there. Even if 1 or 2 quarters might not be amazing, there is zero reason, I think this is how Vlad and the company's thinking of it, to tank us, because we have built a business that is growing, that is external to just focus on the market. There's parts of the business like gold subscribers, retirement, etc., that are not just contingent on market conditions. And like, we deserve to get a premium because we are executing. And it's basically like Robinhood's basically won the game. It's Schwab, Robinhood, and Fidelity. No one else is competing with Robinhood. No other startup brokerage that, wants to get into the consumer brokerage space is compete. There's just no competition. They're done. Like, they won at this point. Now it's them and the Schwabs and the Fidelities of the world. So if that's the case, Robinhood's basically saying, we think we're so confident in our stock at that point, we're buying the crap out of our stock if it falls on a dip. And I think that makes a lot of sense because if it does fall, then you want to have basically Robinhood giving a floor to the stock, which is my overall point. I think they're giving a floor to the stock, and that floor is $20. I think, can Robinhood fall below $20? Yes, 100%. It's just going to not be the easiest now, because if they do, Wall Street has to think, wow, well, these guys have $1 billion ready to deploy. This is one of the reasons why Apple went from 167 to 190, is because if it falls back to 167, what is Apple going to do? They're just going to buy their stock. And it's like, if Apple's buying their stock, if you're Wall Street, you're like, well, why don't we buy the stock as well if management feels confident enough to get into their own stock? The difference between Apple and Robinhood is Robinhood is actually growing. Apple's like not growing. Some people are saying, oh, well, Robinhood didn't buy back their stock when they were undervalued. Why are they doing it now at double the share price? 2 things. Number one, at 1096, Robinhood did buy their stock, 55 million shares. Remember, FTX bought 7% of the company, and then Sam Bankman-Fried went to jail. So those 55 million shares, instead of those letting get dumped on the market, which Robinhood could have done, would have been very easy to just like dump those shares and dilute shareholders even more. They bought them back. At the time, they had $6 billion in cash. They spent $605 million, which is, you know, more than $500 million, and they put it back into their stock. Now they're doing that again to the tune of $1 billion, which is a reflection on how they feel the company has grown, even if they buy back the stock at double the share price. And at double the share price, you could argue Robinhood is way cheaper at $20 versus at $10.96, given how much they've grown. And I think that is the reason for why they're doing this, because they've done this before, and now they just realize it's a better chance to do this as the stock has gone up. Another real quick thing right here. I've seen a lot of people on Twitter say, oh, well, a growth company shouldn't do buybacks. I think a lot of these people have no, I think they have, I was about to say they have no effing clue, but I think they have no clue what they're talking about. Like, yeah, traditionally, if a company's growing like 2% year over year, a la Apple, and you're classifying them as a growth stock and you do buybacks, the Peter Thiel argument is you don't know what the hell you're doing. You're not innovative, and like you need to like get better leadership to go do something. That's not the case with Robinhood. They are growing. I mean, these are all the tailwinds. $4 billion a month in deposits, 1 million people on the wait list for credit cards, crypto trading volumes of 3%, 3x year over year, growing revenues 40% year over year, 500 accounts a quarter, 500,000 accounts, 700 billion in retirement, launching internationally, yada. There's like a billion things that are behind them that are tailwinds. And on top of all of that, they have $5 billion in cash. So to me, I was like, basically they're saying, hey, we don't really need the $5 billion in cash. All the $5 billion is doing is collecting 5% in treasury bonds. Why don't we take some of that cash, give it back to shareholders, like solidify the fact that there's no way we think the stock should be under a certain level, which I think is around $20, buy back about 50 million shares, reduce 5% of the float, and give shareholders, institutional shareholders that own 80% of the company, by the way, it's not majority retail, it's majority institutional, to have another reason to buy back into our vision on top of Bank of America upgrading Robinhood to $24 2 weeks ago. So I think it's a really simple reason why they're doing the buybacks. It makes a lot of sense. And that's the case. Vitaly says, are you calling me out? No, Vitaly, I'm actually not calling you out. Vitaly made the Peter Thiel argument yesterday, but it's not just you. A lot of people made the argument. I think anyone who makes the argument that Robinhood themselves doing this buyback is a mistake because they're in growth mode, doesn't understand two things. Number one, they don't understand that Robinhood's growing. And dude, I can talk for the next 5 hours about the tailwinds Robinhood has. So like, if I can talk literally for the next 5 hours about all the tailwinds that are, by the way, growth tailwinds, and they have $5 billion in cash, I think they just have excess capital and they should be able to do it. And number two is that most growth companies don't have this much cash, right? They're not Meta or Google that has had like $200 billion that are just sitting around that they don't know what to do with. Most growth companies, barely have $1 billion, $2 billion in cash. And so they need to be really diligent, use that money effectively, and then go forward. Robinhood has been blessed via their IPO, which, by the way, a lot of people suffered through their IPO. But because of that IPO, I wasn't one of those people that bought it at $38 a share. Some other schmucks did. And those schmucks are now down on their shares. Sorry, it sucks to suck, right? I was the schmuck that bought fucking Palantir at $27 in 2021. I was a different type of schmuck. But the point is they raised so much money from the IPO that they were able to have, and then they grew over the past 3 years, $6.3 billion in cash. It's like, what do you do with all that money? Like, what are you going to do with that extra $1 billion that's going to grow the company that substantially? Here's another thing about this thing on Robinhood. This is another reason I disagree with Vitaly here. He said they should have bought Sofi. Okay, that's disrespectful. We're not Sofi's not selling for $1 billion. But here's another thing. Everyone has said over the past, not everyone, but like all the bears have been like, oh, Robinhood can't do this 1% match. Robinhood can't give 3% on the IRA. This is unprofitable. They can't afford to do a 3% credit card match. They don't have the money to do this. They're going to go bankrupt. If management is saying, hey, we can do $1 billion of buybacks, and we can give 3% on the Roth IRA match, and we can do the 1% match on instant deposits, and we can afford to do the 3% cash back with the credit card with $1 billion left over. By the way, Vlad, math guy, right? Math masters from Stanford. The company they acquired, X1, that's a math. All those engineers were Stanford engineers that also majored in math. I think the entire organization, or at least the math heads of the organization, looked at all their numbers, looked at all their projections, and they were like, yeah, we have $1 billion left over. What the fuck do we do with it? So it's like, I don't think they have any liquidity concerns. I think it's now a question of, wait, can they really reward shareholders on top of a phenomenal year? The stock's already up 60% this year. If they can really go the next level, I think that's why this $1 billion makes sense. I think that's why it makes sense. Mario says, I was that schmuck. It's okay. We were all schmucks in different ways. So to me, I think this is bullish, dude. I tried to think long and hard last night. I was like, is this bearish? Are they doing it? Because I try to take the objective standpoint. Are they doing it from a position of weakness? Are they doing it from a position of, they're not innovating, they're not growing, they don't know what to do, so they're putting the money and they're trying to just like massage Wall Street's concerns and stuff like that? That is a legit argument. And the more I thought about it, I'm like, no, dude, if they really needed that billion to grow, they already stepped up their sales and marketing. It's not like they're not, I think they're spending close to a couple $100 million from like 70, 80 million. So they're ramping it up, 1 to 2x. It's not like they don't have the money. I think what Vlad's looking at is like, hey guys, we're making so much damn money. They're probably looking at their crypto numbers this month and they're like, dude, we're about to do another 100 million in net income off crypto. Like, we don't need this billion sitting there collecting 5% when we're going to beat on all of our estimates. But if we buy back our stock, we can almost guarantee that the stock has the ability to have momentum. And 1 or 2 numbers here that the street doesn't like doesn't necessarily hurt the company over the long term. Also, this can only start in Q3. So it's not like that billion leaves over the next basically 90 days. So they still have 90 days of that billion on the balance sheet. And then in Q3, when I think they've really solidified their position, then they're like, all right, let's buy back some stock. So overall, I think it's a good move. I think it makes a lot of sense. And it's one of those things where I did not expect to do them yesterday. I told my dad about this. So I had to explain to my dad what a buyback was yesterday, because he was like, why the fuck is Robinhood up 7%? And I had to explain the whole thing to him. First, real quick, another catalyst: futures and Forex options are coming in 2024. April 29th, they put out this job about derivative traders to be on the company to build out their Robinhood Derivatives LLC. So that's another tailwind that's going to create even more momentum and growth on their gold offering, which should be coming out probably by the end of the summer, I think. And so that's another catalyst. So I told my dad about this, right? And I had to explain what a buyback was. Vlad actually liked this tweet at 3 a.m. last night. So I was up at 3 a.m. and I got the notification that Vlad tended to like your tweet. I was like, oh my God. So yeah, I said, I just told my 61-year-old Indian immigrant dad about the Hood Robinhood buybacks. I had to explain the entire concept of a buyback. And at the end, he was like, yo, this Vlad dude is doing something fucking every day. He's a smart fucking guy. And with Indian fathers, when they say the F word, dude, in their thick Indian accent, it's almost like he was mad at Vlad, dude. It was hilarious. This fucking Vlad guy, dude, he's doing something every day. He's a smart guy. Once I explained what a buyback was, because he has Robinhood shares, right? But Vlad is in charge of a bit of his money as well, and he was kind of low-key upset at how good Vlad has been acting. And but in my point, it does feel like every day I'm telling him about something Robinhood's doing product-wise or business-wise, and so he's like, damn, this Vlad is doing something every effing day. He's a smart effing guy. And then at the end of this conversation, he was like, so why is Palantir flat? And then I had to be like, that it doesn't really matter. I was trying to make up some excuses for why it's like me on the YouTube videos trying to make excuses for why Palantir is flat. I'm like, well, it's up 25% year to date. That's okay, right? That's beat the S&P 500 by double. We don't need that much more, right? It's okay. Every day he's like, yo, why is this shit not moving? I'm like, dude, your guess is as good as mine. No, but honestly, the reason Palantir is flat is because they're fully priced in terms of their valuation. They need to keep growing, reduce that PE. It's going to take some time. But for Robinhood, they just have so many tailwinds. And if they have so many tailwinds, then those tailwinds are gonna end up being momentum. Does your dad own Palantir? Yeah, I think he owns 250 shares. So my dad does own some Palantir. Jay for real Brooklyn says, weren't you the one yesterday on the market open who also agreed that Robinhood should not do a buyback to my SoFi question and said it would be bearish because they need to do growth? Yes. So on the market open yesterday, this is also why it was ironic. Someone asked me, hey, if Robinhood could do a buyback, would you say yes? And personally, I said, well, I don't think they need to. I would rather them use that money to grow. After going through all of the things I thought about last night and actually looking at the internals of the business, looking at the financials, looking at the buyback they did before, I started realizing, well, what would I want them to do with that billion in cash? I mean, again, they have 5.2 billion in cash. If I wanted them to say, no, don't buy back your stock, do something with that billion, I started asking myself, what would I want them to do that they're not already doing? I'm like, they already introduced credit cards. They already introduced a new UI. They already introduced 1% match. They already introduced 3% match on the IRA. They already are introducing derivatives and Forex and futures options. They're already doing a new web version of the desktop, right? Which is supposed to rival Webull. And Vlad said that on the channel that they're going to try to make something that competes. So I don't have to use Webull anymore because he doesn't like that I'm using Webull over Robinhood products, right? They're already expanding to the UK. They're already expanding to the EU. They're already building out staking on Solana in Europe. I'm like, what more do I want? What could I ask them to do with that billion? I mean, go acquire some random company that's probably not going to be a right culture fit. What do I really want Robinhood to do? And so I started thinking about, well, they're using 20% of their cash and they don't need the cash. Like they don't need to use it. How much, like, do I want them to give 2% on an instant deposit match? Like, do I want them to go all out, like, is that really going to increase brokerage transfers? I don't know. So in my head, I'm like, well, it's not that I need them to do a buyback, but if they're doing it, I'm not upset with it. Whereas for Palantir, I would be upset. I would be upset if Palantir bought, because, and here's the other thing. Here's the final thing I'll say, then we'll move on. Palantir has 2.1 billion shares outstanding. Robinhood has 900 million. For Palantir to do a 50 million share, 44 million share buyback at 22.50 or whatever the price would be, dude, it's not even making a dent. It's like not even making a dent in the outstanding share float. So I don't think as a shareholder, I would feel the implication of that. Robinhood doing $1 billion share buyback at this price or a little bit above this price, that's 5 to 6% of the float gone. That's a big dent compared to Palantir, which would be maybe 1% or close to 1%. And Palantir actually needs to grow. I mean, Robinhood's growing 40% year over year. Palantir's growing 21% year over year. If all Palantir is telling us is, hey, if we get more customers, we'll grow. It's like, okay, take that $1 billion, go do more boot camps, because buying back your stock makes no sense at this point. Robinhood doesn't really need to do boot camps. They're already excessively growing given the market momentum that's behind them and all the things that they're all their organic initiatives. So in my head, I'm like, I don't think it makes a lot of sense for them to not do a buyback. And so that's what I thought. Anyway, super amazing stuff. Shout out to Robinhood shareholders. We'll see how the stock does, but this is really good news. And eventually, if Robinhood needs to do anything, if the stock ends up falling, if they want the opportunity to buy the dip, they will have that opportunity. Cool that they were able to end up doing that buyback. Okay, let's hear from Tom Lee on CNBC. He is still bullish for the market. Let's get his perspective on why, and then we'll keep going from there.
High-powered rally showing little sign of slowing today, with the chipmaker hitting an all-time high. The Nasdaq closing above 17,000 for the very first time. Nvidia is up nearly 20% since its earnings report just last week. And check out some of the other names in the chip sector hitting all-time highs today: Micron, NXP Semi, Qualcomm, and Texas Instruments. So, should investors count on Nvidia to keep driving the market higher? Joining us now is FundStrat's head of research and CNBC contributor, Tom Lee. Tom, good to see you. So you're still bullish heading into June. You say there's too little investor confidence, too much cash on the sidelines, but it seems to be flowing in now. So how do you invest and not get burned by volatility?
Well, it has been one of those years where, investors have been hesitant all year, and I think we have had some short pullbacks, but I think the best strategy for investors is just really stick with what's working. And what's working is AI related names, whether it's Nvidia or highly correlated stocks like Cadence or Supermicro, the Ozempic related trades, industrials, financials are doing great. And the Bitcoin and the proxies as well as I think a growing small cap stealth rally. So I think there's still a lot of ways to be invested in this market.
The small caps have been hot to the touch, though, not in a good way, especially with yields occasionally spiking. So are there certain areas within small cap that you'd say average into, or how are you treating them compared to the mega caps?
Well, small caps, I think, have been very sensitive to the probabilities of a Fed cut. So I think they're very sensitive to actually when the Fed begins cutting. And, the last few comments from the Fed have actually hurt small caps because the odds of a June cut have been pushed out, and maybe, the odds of a September cut are, diminishing. So I think that weighs on small caps, but it doesn't take away from the fundamental attractiveness of small caps. Earnings growth is close to 19% in the median Russell 2000 stock. And
guys, we got a new Palantir thing. We got a new Palantir deal. We'll let Tom Lee finish. It's not like a brand new partnership. It's an extension of a previous partnership, but we'll talk about that right after Tom Lee goes.
Median PE is 11 times. So you're getting far better earnings growth in the S&P and a much lower PE multiple.
What's incredible about that, Tom, is the fact that we went from, at the beginning of the year, a market that was aggressively pricing in this flurry of rate cuts to now a market where stocks are continuing to move higher as investors digest the possibility, or I guess are hoping for the possibility, that we have a Fed that doesn't raise rates again before the end of the year. That seems to be the thing. That's sort of being taken as the thing. Every time Powell or somebody else comes out and says, oh, we think the peak is in, we don't think we have to raise again. We've really seen an incredible pendulum swing. And it raises the question, how much now hinges on earnings if that's going to be the scenario?
Well, I think that's spot on. I mean, first, the number of expected cuts has shrunk, but it's really shrunk for the right reasons. The economy's been good. Inflation is progressing, maybe not the speed anyone would like, but the reality is, 3% or even 7% inflation is really good for corporate profits. So I think the earnings outlook actually is far better than most expect. I mean, you can see the beats by Nvidia as an example, but S&P earnings next year, maybe if consensus at 270 something, it might be closer to 280. So you can see why there's upside for stocks.
We just had the S&P close at 5306 today. I believe your year-end target is still 5200. Does it need to come up? How are you thinking about it?
Yeah. I mean, our year-end target is too low because, next year's earnings, if it's 280 and you put a, 20 multiple, that's way above 5200. But it's only early June, and I think we're still just deciding whether or not there is a speed bump between June and December. But yeah, I'd say 5200 is too low.
Tom, how do you treat the weight loss and overall health trade epitomized by Lilly? It's up at real highs now, $750 billion market cap, but it's been bouncing around in this range for about 3 months.
Yeah, it's I think a lot of large cap stocks that have been leading show similar patterns of sort of consolidation. And, I think it would be too early for someone to say that, Ozempic and the GLP drugs have peaked. So to us, it's really an opportunity for someone to be accumulating. I don't think it looks that different than Nvidia into earnings or, many of the stocks that have broken out recently.
So I agree with overall what Tom Lee's saying right there, which is that earnings growth is justifying the momentum. And again, we've been talking about this over and over again, but he's right. Like the earnings growth is justifying the momentum. We have a bunch of earnings today that I'm going to go through after this Palantir news, and the earnings are good. I mean, we had some really good earnings this morning and after hours. If Salesforce can put up good numbers, if Path can put up good numbers, it's going to continuously reinforce. Even Box yesterday. Box is this like cloud management company. They put up good numbers yesterday. The stock didn't, super pop on it, but still they put up good numbers. And it's good to see companies of all shapes and sizes are putting up the numbers. So if you take a 24x PE on, I think $237 or $256 per share on the S&P, you get to a price of around 5,300, and that's not that bad of a price given we're already there. And now if we continue to justify the multiple or expand the multiple, if earnings growth continues to grow, we are already up 8% versus expectations in Q1 for the S&P 500 companies, which is good. Then that multiple can continue to grow if inflation continues to come down. Let's talk about Palantir. This news just broke like 20 minutes ago. And then we'll discuss some more macro news because there's a bunch of macro stuff we have to talk about. I'm convinced Tom doesn't have eyebrows. Those are birthmarks. Tom's hair has been epic for the majority of 2024. So I love how his hair has been standing up. Here we go. We got Eaton deepening their partnership with Palantir to enhance AI uses in operations. For those that don't know Eaton is a manufacturing company, if I'm not wrong. They're an Irish-American multinational power management company founded in the United States and incorporated in Dublin. I'm not going to make the joke about Dublin. I'm going to spare you guys. I made it twice, and I'm sure the people that are here have already heard the joke. But for those that haven't heard the joke, I love Dublin because it's like how I like my money, constantly Dublin. Okay, anyway, so Eaton Corporation, Irish-American multinational power management company, continuing to use Palantir. So how are they using Palantir, and what's the extent of this partnership? Let's read a little bit from here. The enhanced collaboration will offer a unique data management solution to accelerate and modernize ERP deployments with an AI-powered data mapping, cleansing, and migration automation. Palantir will support Eaton's AI innovation process by providing a systematic way to turn ideas into reality. A set of AIP Now marketplace applications will speed up the value creation across Eaton's global operations. And AIP Now are kind of those like smaller workflows without the entire thick product of AIP that Palantir is pushing as a way for organizations to immediately get set up with different use cases, whether that's demand generation, scheduling, whatever it may be, to incorporate into their enterprise. Quote from Eaton's chief data officer: while many talk about the promise of generative AI, Eaton and Palantir are building something at the heart of our operations. We view these AI-enabled applications as strategic differentiators that will greatly accelerate productivity and, more importantly, improve our ability to deliver value for our customers. Previously, Eaton and Palantir worked together to develop and deliver an AI-assisted workflow of Eaton's supply chain team. The solution proactively identified and resolved material shortages, preventing downtime and unblocking the assembly of finished goods. So it's like they worked together about a year ago on one use case, or a small set of use cases of AI in the enterprise, and now they're deepening that partnership across a variety of other systems and ERP systems that Eaton has. Quote from Palantir, the commercial lead for industrial, says, the scope and reach of Eaton, with operations in some 160 countries, along with its position as a leader in the energy transition, make it an ideal partner for Palantir. Through the use of our software, we're excited to increase the adoption of AI in Eaton's operations and accelerate Eaton's impact, empowering the clean energy and AI revolution. There you go. There you go. Not bad. A couple things on this partnership. Number one, clients want to work with Palantir as much as Palantir wants clients, because those clients then get to go to their board of directors, their shareholders, their customers, their potential investors, and say, hey, we're working with Palantir, and Palantir is the real deal. It's a very mutual relationship when you're working with the top, or the perceived to be top. I think it is the top, right? But it's more about, how the market perceives it. The top AI company, kind of like Snowflake working with Nvidia, right? Even though I think that partnership is nonsense and it's BS, because we haven't heard of anything from that partnership for like 18 months now. If they get to say Nvidia, everyone gets excited. So I think them saying, hey, we're working with Palantir, and there's a real way we're working with Palantir to adapt and modernize our enterprise. And Palantir gets to say, hey, look at this big ass company that's public. Oh, wow. They're I didn't even know they were public. ETN, that's the ticker. This company that's public, that's a big deal, using our software. Like, maybe they're using it for a reason. Wow. Eaton's up 41% year to date. Holy crap. Dude, and like, I don't think it's I don't think it's simplifying saying that part of the reason they're up 41% year to date is because Palantir is increasing their margins, increasing their revenues, decreasing their costs. All the promises of AI, they're down like 1% in the pre-market. But the fact that they're up year to date on 41%, and they're doing a public partnership with Palantir, this is not like a little, oh yeah, we're using Palantir. It's like, no. They came together literally to issue a press release to millions of people. I would imagine they're doing that press release because the reason they're up 41% year to date, or at least one of the main reasons, is because they've implemented AI in the enterprise. And there you go. That makes a lot of sense for them to continue working on their partnership with Palantir. I mean, a lot of times, if you just look at the stock price, you can tell if a company is actually getting the benefit from their software. Because theoretically, like if we're to be in no bullshit, the stock should go up. If you incorporate Palantir into your business and you are decreasing costs, increasing revenues, increasing operating margins, you should be rewarded by shareholders. And if Palantir is one of the reasons for that, we saw that with Lowe's, right? Lowe's had a phenomenal earnings as well. And part of the reason is because, I would argue, that Palantir is helping them. It's not the only reason, obviously, but it is one of those reasons that's helping them. And it makes sense at the end of the day for why they're wanting to work with Palantir. It's only a matter of time before their competitors see this and understand why they really need Palantir. Yeah, I agree. And I think it's a question of customer growth. And if that customer growth comes, hopefully by early 2025, the revenue growth will happen as well. Eaton has a large market cap. What is their market cap? Eaton's market cap is, wow, $134 billion. Dude, I didn't even know this was that big of a company. I actually didn't know. Revenue of $20 billion a year. Holy crap. Yeah, this isn't a small company. 85,000 employees. And they're probably not even done incorporating Palantir. I mean, we've got 85,000 employees. There's all the sectors throughout the business that could probably adopt some version of Palantir. They probably only used it in a couple of sectors, right? When that expands throughout the entire company, that's a big deal. That's a very, very big deal. Spencer says, Amit, thoughts on playing Unity instead of Rivian? So first of all, I just want to make something very clear. After I talked about Rivian yesterday, I do not have a position in Rivian. I'm not going balls deep in Rivian. I'm still exploring Rivian. So for anyone who's looking at Rivian because I brought it up yesterday, send me your DD. I mean, honestly, I would love to get anyone's DD, but I am not in Rivian yet. Your thoughts on playing Unity instead of Rivian? The reason you're asking that is because Unity's down 60% year to date, and you're probably asking that maybe it has more upside than Rivian because Rivian potentially might go bankrupt. If that's the initial premise of your question, I think that makes a lot of sense. I don't know anything about Unity yet either, though. So it's something to definitely look into. I will go deeper into Unity and Rivian because I'm looking for a stock that's beaten up badly. There was another stock I was looking at. Oh, DraftKings yesterday. I was looking at the options on that. DraftKings is down 12% on a regulation thing. Like, do I really think that Illinois state law about progressive taxing on sports betting is going to ruin their business over the next 3 years? Not really. Like, I think it's a headwind that they'll get through, but these are what I like to see. Some stupid stuff that happens in the market creates an irrational buying opportunity. Even Celsius, even though the valuation on Celsius is not that attractive given some of the stuff that came out. We'll talk about them in a second. And so when those dips happen and they're really, one could argue, cheap because of the dip, whether that's Rivian, Unity, or DraftKings, or even a Celsius, maybe there's an opportunity to start buying. So I'm looking at all these companies right now. I have not made any sort of big option plays of like buying leaps out into the future on them as they are quote unquote undervalued right now. But Unity is definitely on the list to look into because they got beaten up. And in this market, you kind of need to find something that's beaten up. Like, it's kind of hard to buy leaps on something. Like, you literally can't buy leaps on something that's up 100% year. Like, you can't do that, right? Like, it's very difficult because the thing has run up too much. The underlying asset has done the move that you want it to do. Now you're asking for it to do a lot, and maybe it still does it, but it's just, you're asking a lot for, the thing to go up another 200% after it might be already up. Lulu, no. I don't believe in Lulu. I think it's, well, and I could be wrong about this. My naivete, and this could be a stupid opinion, but my gut opinion is that Lulu's too expensive for the average consumer. And if we're going to get into a little bit of consumer weakness, which one could argue we will, right? We're not going to be sunshine and rainbows forever in terms of the consumer. They're not shopping at Lululemon, dude. They're shopping everywhere besides Lululemon. So that would not be a candidate, but I will be looking at Unity for sure. Vitaly's in Unity, so I definitely have to look at it. If he's fucking buying that stock, I have to. Okay, Vitaly's a smart guy. Let me. What the hell does he see in Unity? So I have to. But we should do a podcast with him. I wanted to do a podcast with Vitaly on Enovix and Unity because the premiums on Wheeling and Enovix are really good. But I have no faith in Enovix at all. I think it's a startup that shouldn't be public. Like, I have zero faith in Enovix. So I actually want to do a podcast with Vitaly just on Enovix. And I think we'll do another Financial Junkies episode just on Unity so he can really break down the thesis. And we'll get a better understanding of it as well. Uber and Shop are also decent candidates. They're a bit more expensive. The premiums are not that amazing, but they're candidates because they are down over the past couple months as well. All right, Michael Wilder, good morning. Thank you, everybody, for being here today. Intel premium sucks. That's the only problem. Intel premium sucks, but I've been looking at Intel as well. The premiums are just not amazing. Unity is diluting 30% by Q4. That's the other problem with Unity, dude. The dilution is disgusting. Like, it's really disgusting. But maybe still it's down, 75%. Maybe the dilution doesn't matter that much if the street has already punched it and there's more momentum to get to the upside. So we'll be taking a look at all those. But again, if you're just joining, biggest news of yesterday, Robinhood, $1 billion in buybacks. Super exciting stuff. We talked about it for the first 20 minutes. Then Palantir just announced a deepening partnership with Eaton, which is a $134 billion energy manufacturing company that is continuing to use Palantir. So big news on that. And now we will continue to go into some macro stuff. So let's pull up earnings. Let's see what we got for earnings. Let's discuss all of that. And then we'll keep going. Why is the market down right now? The market is down. That is correct. The market is down. Honestly, I'm looking at some of my economic data. And the only bad news that I'm seeing is that Germany's inflation rate rose to 2.4%. So from a macro perspective, Germany edged up to 2.4% in May 2024 compared to a 3-year low of 2.2% in the previous 2 months. As a result of that, the 10-year treasury is inching higher. So we're at 10 years at 4.58, which is a bit higher. We were at 4.3 for the past week and a half. So that's another reason why equities could be down. On top of that, I do believe oil is up. Yup, oil is up. WTI crude back to $80. And the reason for this is because OPEC is having some meeting thing that they're doing. I'm going to Google it real quick. But OPEC yesterday decided that they were having some meeting. And yeah, oil is up on OPEC's meeting, as you can see right here. And this meeting is when OPEC gained more than $1 a barrel on Tuesday on the expectation that OPEC will maintain crude supply curbs as it's at its June 2nd meeting. So the market's basically pricing in, okay, OPEC is not necessarily going to increase their supply. And as a result of that, that is going to lead to some more volatility in oil to the upside, because if they don't increase supply, but demand stays high, then obviously the price of oil will continue to go higher. This is why Joe Biden unleashed the strategic oil reserve a week ago, which kind of did help with oil prices for like a day. I mean, even I saw it when I was filling up my gas. I was like, oh, it's kind of cheaper. But that's not going to be a long-term solution. So I think the reasons the markets are down right now is the 10 years higher. Germany's inflation rate. Germany is a relatively big country, right? So their inflation rate goes higher. You're going to see some issues across the entire world. And then you got the US 10-year that goes higher on top of oil going higher. However, I think the broader reason the market is down is just because people are taking some profits, dude. Like, I think people are, I really think people just want to take some profits. Nvidia, for some reason, no one on the planet wants to take profits on Nvidia.
And I can't blame them. I mean, dude, if you have Nvidia and you got in at a cheap price, like why would you take profits? It's so funny. You're just like watching the market fight over your shares that you're not selling to them, and they just have to keep bidding higher. It's like hilarious. But I think the market's taking some profits. I mean, we've had a good couple of weeks. We've had pretty much green days across the board. We've had green weeks. Even GameStop was up 25% yesterday. It's down 7% right now. But the market's had a relatively nice string of weeks. And I think them taking some profits, Enphase down 3% right now in the pre-markets is not a big deal. So it does make sense that the market's taking a little bit of profits. And I think it's a relatively healthy dip as we get into it. But I think it's a dip that's going to be eaten up because the market kind of knows what's happening. And if they want to continue to be in the market, they're going to buy up equities. On top of that, Neil Kashkari, the Minnesota Fed president, he said yesterday rate hikes are not off the table. I think this guy literally is an attention whore. I mean, I'm an attention whore, but I think he's a different type of attention whore. Jerome Powell and other Fed presidents like Bostic last week have said for the past 3 months, we don't think we're doing a hike. And then Neil Kashkari comes out, well, a hike's not off the table. Like, I think literally this guy's like writing a book or something. Like, he just loves the attention on him. And that's another reason the market's like, well, if this guy, thinks a hike's on, like, maybe there's another reason we should sell, take some profits. So I think all of that together is actually the reason for why we're seeing a little bit of weakness right now in the markets. But again, I think people want this dip if it gets juicy. All right, let's look at earnings. So Dick's had earnings today. Dick's is DKAS. This is another consumer retail company. They are up 10%. Holy crap. Okay, so Dick's revenue, $3.02 billion versus $2.94. So they beat on revenue. EPS, $3.30 versus $2.95. They beat by 12%. And it looks like they raised guidance in a pretty incredible way. Let me search Dick's on Google. Let me make sure I put an IR after that so I don't get different types of results. Okay, so here we go. Dick's, let's just look at this real quick. Then we'll go to Chewy, that they had earnings as well. It's good to see a company like Dick's go up 10%, dude. Oh, they raised their 2024 outlook. There you go. They raised 2024 guidance for comparable sales growth of 2 to 3%. Diluted earnings share guidance from $13.35 to $13.75. So they raised it by about 40 cents. I think they've always had a dividend, so I don't think this is new, this dividend. Did they always have a dividend? Yeah, they always have a dividend. So the dividend is not new news, and they have a dividend. Wow, 10% up and having a dividend? That's not bad, dude. Holy crap. 10% up and having a dividend. The dick is up, bro. Holy crap, dude. That's incredible. That is absolutely incredible. I mean, dude, like you see a company that doesn't grow enough like this. They're only growing 6% year over year, and they're up 10%. It means the street must really like what they're seeing. Market cap of, wow, Dick's is only $15 billion? I thought Dick's was like a $200 billion company. Dude, Dick's has been around for a long time. Like, Dick's Sporting Goods has been around for a very long time. This is not a new company. Wow, did not expect that. Okay, so Dick's $15 billion company, 6% year-over-year growth, 10% up in the pre-markets, dividend yield of 2.26%. The fact that we're seeing dividend yielding companies continue to give you capital appreciation and dividend growth is quite incredible. I actually put out a post about this on Monday about 5 stocks that had really good dividend growth, but also have a nice yield to them. Let me pull up that post real quick. Let me know if anyone's in these names, but the tickers are TRMD. They're a marine tanker for oil. ET, Steve's been talking about this one, energy transfer. SBLK, another ship transporter. ARLP, a coal maker. And then SLG, I'm sure everyone knows this, the New York City REIT. These are companies that have given you nice year-to-date returns, 20%, 12%, 9%, 14%, and above a 7% dividend, or above at least a 5% dividend. So we are seeing Dick's added to that list. Dick's year-to-date, let me see, year-to-date, their stock. Wow, dude, 33%. This is incredible, dude. You want to see stuff like this besides Nvidia and Microsoft and all that stuff. Like, you want to see companies. Oh, 9:30, the market's open. Oh my God. What am I holy crap, dude. All right. So yeah, I was so enamored by these Dicks, dude, that I forgot that the market's open. Thank you everybody for being here. 9:31 a.m. The stock market is now open. Dude, it's something about Dicks this morning. I don't know what to tell you. There's something about it. There's just when you see a Dick that big, look at this 9%. sometimes you have to admire it. It is what it is. All right, 213 on Dix, up 9.3% on the day. Incredible growth for Dix. S&P 500 down about 0.72%. Again, 10 years up, oil's up, so I can see a little bit of weakness there coming from the S&P 500. So we're seeing some weakness there. Robinhood up 2.39%, $20.95, announced a $1 billion share buyback. I told this story yesterday on the market close, but Robinhood was down yesterday, but the options I had on Robinhood were not down. And usually that doesn't happen. If the stock falls, the options, they're volatile with it and they fall. And it seems like the market always knows because my options stayed up, stayed flat or green yesterday, even though the stock was down. And usually that doesn't happen. And it's obviously because someone was buying up those fucking options because they knew that Robinhood was going to announce something. So there you go on Robinhood. Palantir, $20.77, down 1.33% of the day. Intel, $30.46, down 1.93%. Lululemon, $2.95. Microsoft's down a little bit. Celsius, we'll talk more about Celsius, but apparently there's some chemical in their drinks that's going viral because some kid almost died because he drank 2 of them in a day. And it's a little bit of bad press for Celsius. $80 right there, down 2.56%. On Celsius. Kava, they had incredible earnings. They're down another 3.5%. They were down yesterday as well. I don't think they deserve to necessarily be down. I thought their earnings were great, but it is up 100% year to date. So maybe the valuation is getting ahead of it, which is fine. But their earnings were incredible. 30% year over year growth, and they're expanding stores throughout the entire country. So I thought they had good earnings. Box, this company is up 4.27%. Not bad. They're up. Amazon's moving up. Okay, where's Amazon? Amazon is 182. Wow. Not bad. Amazon up on the day. It was stuck at around 179 for the past couple of days. Chewy, we didn't talk about their earnings, so let's talk about that. Chewy's up 15%. So a couple things on Chewy. They did announce a $500 million buyback, so that's big news for them. In terms of revenue, they beat by 1%. And in terms of EPS, there's the beat. They beat by 342%. 31 cents a share versus 7 cents a share. Let me know if anyone was in Chewy. Chewy's market cap is $8.6 billion. Now they're up 18%. Wow. Look at that on Chewy. Absolutely incredible. This was the company, by the way, that Ryan Cohen, the current founder of or CEO of GameStop, he founded this company. He sold this company for like $1 billion a while ago. So look at that. We got Chewy's up. We got Dick's up. We got Abercrombie's up 5.8%, 6%. Their earnings, let me pull those up real quick. Abercrombie, their earnings on revenue, they beat by 6%, $1.02 billion versus $963 million. And on EPS, they beat by 24%, $2.14 versus $1.73. I don't know who's still shopping at Abercrombie. Let me know in the chat. I used to shop there when I was like 15, when I was in high school. I don't shop at Abercrombie anymore, but apparently they reinvented the brand and now everyone shops at Abercrombie. And their operating margins are up 700%. Because they've gotten so much foot traffic that they've been able to raise prices. Like, I don't know why people love Abercrombie, but they love it. So that one deserves to be up. It's up like 300% year to date or over the past year. And that one's doing phenomenal right now. So Abercrombie's up 5%. Also, that pushes back against the narrative on Target earnings. Everyone's like, oh, the consumer's weak. The consumer's weak. They're not shopping at Target. No, bro. Target either just has shitty products or or they're too expensive, right? If they're shopping at freaking Abercrombie, which is not an inexpensive brand, or Dick's, or Chewy, they're still buying premium food products for their pets. That's what Chewy sells. I think it makes sense that the consumers may be weakening, but they're not dramatically weakening like the bears are pointing out. And if that's the case, then maybe we're not in a horrible situation. Okay, Faraday futures down 36%. This is not good news because now they're under $1. And I think they need to be above $1 over the next few days in order to not get delisted from the New York Stock Exchange. So this is not good news. Someone dumped a crap ton of shares right now. And I don't know if there's going to be enough bulls to recover this thing, but this is why it's always hard to be in meme stocks. You never know when it's going to be pulled. Robinhood taking a tumble right now. So again, Robinhood, great news yesterday, but I expected Robinhood to fall. I mean, if the S&P falls, 1%, Robinhood's going to take a hit. Palantir is going to take a hit. So a lot of these companies taking a little bit of a dip because we are getting a bit of a red day. Celsius continued to fall down 2%. Unity is down another 1.68%. Sofi, wow, 674. Holy crap. Oh my God, dude. What is going on here? Someone full ported into Sofi yesterday and now they're down. Someone bought 18,500 shares on Wall Street Bets at $6.94 on Sofi. They just posted this yesterday. And now they're down, what is this, 3%, 4% on this position. So they took, the ironic thing is, dude, I didn't even notice this with someone putting it out in the comments. I was like, holy crap. They full ported into Sofi on Robinhood.
was like, wait a second. I swear, I didn't even think of that when I posted this. I just wanted to post it because I was like, oh shit, someone full ports it into SoFi. And someone's like, they're doing this on Robinhood. Don't you think they should be doing it on SoFi? It's like, you have a point. If you're going to full port SoFi, why don't you do it on SoFi? Like, if you believe in SoFi that much, you might as well do it on their app. And it's like, nope, they did it on Robinhood. It's like, if that's not the most 2024 picture you could think of in terms of what's happening between both companies, I'm like, yeah, that does make sense. So SoFi right now, Anthony Noto did buy like another 30,000 shares yesterday. So he continues to buy on the dip. I think he bought it like 691 or 694 yesterday. So Noto continues to buy. $17 Chewy calls are up 300%. Was anyone in Chewy? Was anyone in Chewy, Dick's, or Abercrombie? Put in the chat. Was anyone in any of three of those names before earnings today? Because, dude, I wish someone told us about Chewy's to take a look at Chewy. That's why whenever you guys in the chat mention to look at a name, I legit do write it down and I look at it. Because if someone said, hey, look at Chewy, when this thing was at not 20% up on the day and I saw it, I don't see everything, but if I saw it and I wrote it down, I would have looked at it. Maybe there would have been an argument there, dude. Everyone has valuable insights that we can provide. And that's why it's fun to like be in the community. Because if someone's like, hey, mate, you got to look at Dick's, you like them already, you might as well like really look at that. I would have taken a serious look at Dick's. I was at Dick's the other day. I was at the store. I was trying to buy a bike. By the way, guys, I rode my bike for 4 miles after the market opened yesterday. I could not feel my legs by the time I was back home, dude. But it felt so good. I was sweating. I could feel my thighs becoming like thighs of steel after 4 miles. And so I'm going to continue to do that today after the show and build out my thighs of steel. But yeah, I was just at Dick's. And so it makes sense that they're continuing to do well. And they have a dividend of 2%, which is not bad. Amazon at 182, Apple 191. WWDC is happening in June, baby. June 10th, we're going to get WWDC. And we're going to see what happens. So they'll be announcing the new iPhone with ChatGPT. Chris CRM says, just bought SoFi this AM. Will DCA into it if it continues to $5. Yeah, let's see. Look, I don't think SoFi is the worst buy. One thing to remember about SoFi is their tangible book value is $4. So they are trading at a premium above their tangible book. The question becomes why? And the reason for why is because you're paying for the growth that JP Morgan, Bank of America are not able to put up. So if you are buying SoFi at these levels, which I don't think is a horrible level, you just have to remember their tangible book value, which is what banks, trade at a 1 times their price to book, 1.25 if you're being gracious. It makes SoFi a bit higher, it's more value than what theoretically it should be if you're looking at it from a price to book perspective. But I don't think that matters that much because they're growing and they're growing way more than, JP Morgan, et cetera. The question is it worth paying for that growth? And that's the question you have to ask yourself if you're an investor. I think it is. Especially at these prices. I don't think SoFi is going to $4 or $5. I think that's ridiculous. But I think under 7 is not the worst part to get more into SoFi. Oh, Kathy bought more Palantir yesterday. Yes, Kathy bought 9,000 shares of Palantir. So not a ton for her, but she did buy. By the way, Kathy is fully liquidating her Teladoc stake. She's done with Teladoc. So it seems like Kathy is totally getting out of it. And Palantir is now the new option for her. So this is Kathy Wood. Here you go. 9,773 shares of Palantir yesterday. Semler Scientific added Bitcoin Treasury up 41%. Correct. So this is another crazy thing that happened yesterday. Semler Scientific, they basically are trying to pull a MicroStrategy. This is the company right here. Let me look at their stock right now. SMLR, for those that didn't hear about this yesterday. Yeah, they're up another 17% today. God, oh my goodness, dude. This is why I think I really think I think GameStop needs to buy Bitcoin. I mean, so for those that don't know, this is a company. Market cap is 237 million after running up 45%. This is not before. This is after the 2 days of the run. They make medical devices technology. It's a med tech company. Okay, so before this, they were at like a $70 million market cap. Public company. They bought $40 million of Bitcoin yesterday. They go up 30%. Today, they're up another 17%. Are you telling me, are you looking me in the eye and saying that if GameStop does not take 50 million out of the new 2 billion in cash that they have and put it into Bitcoin, that GameStop's not going to run? Semler Scientific is up. What the hell is, like, no one knows what Semler Scientific is unless you really care about medtech. I don't even know why these guys are buying Bitcoin. I mean, it seems kind of obvious, right? They're pumping the stock, or they think, Bitcoin is a strategic crypto reserve, whatever reason they have for it. Instead of buying gold or money market funds, they're buying Bitcoin. And I guess they're trying to be an innovative, medical devices company. And they're up 45%. They increased the value of their company by 45%.
I think if GameStop does this, they're gonna have the exact same thing that happens, and then GameStop can do another at the money market offering when the stock's like $50. All they have to do, all GameStop has to do, is say, "Hey, we're buying 50 million of Bitcoin." It doesn't even have to be a lot of money. All the crypto people are gonna be like, "Oh crap, GameStop, MicroStrategy, CleanSpark, Coinbase, they're all crypto proxies. It's got to be in the mix." And then once you're in the algorithms that are starting to consider you a Bitcoin proxy, and then every month Ryan Cohn's like, "Here's another 50 million. Here's another 50 million. Here's another 20 million. Here's another 30 million of Bitcoin." It just keeps people excited and it keeps the entertainment going. And now that Roaring Kitty's gone, you need something to keep people excited. And I think this would be the case. So that's what we're seeing with Semler Scientific right now, and that's been really good for their stock. Abercrombie and Fitch, wow, it's up 12%. It's up 12% on the day. There you go. Up 12% on the day. This is good, dude. This is good. We want to see this in the stock market. We want to see companies that are worth $9 billion increase their earnings that much that the market's willing to. Also, the reason Abercrombie's up and Chewy is up and honestly Semler Scientific is up is because to an extent, Nvidia's down 2%. The market's maybe thinking, all right, Nvidia's up now 125% year to date. Let's just like chill for a second. Let's like find other shit that's not moving as much as Nvidia's moved, and let's pull money into something that has really good earnings that also isn't up a gigantic amount. And so we're seeing maybe a slight rotation from Nvidia. I think it's very slight because again, Nvidia is still up above 1,000. It's 1,100 for it's like insane. So I still think the market's, basically, buying Nvidia, but still a little bit of money might be coming out and there's going into some of these other names like a Semler or an Abercrombie. I don't think it's like retail apes is what I'm trying to say. I think it's institutions being like, hey, where else can we get a return on our capital? The Nvidia story is played out really nicely. What else can we do? And so we're seeing that as well. Can you check Bitcoin stocks? Yes, let's go to Bitcoin. Where is Bitcoin right now? I think it's been actually silent this morning. Yeah, Bitcoin 67,000. So the inflows yesterday on Bitcoin were good. Net inflows of 100 million. Grayscale ended up selling 100 million worth of Bitcoin, which was really annoying. But BlackRock, Fidelity, they brought in like 250 or 300 million. So the net inflows were about 100 million. So inflows were good yesterday. But Bitcoin's still down. Ethereum has not given up its Ethereum pump ever since the ETF. So really nice to see Ethereum continuing to maintain that momentum. MicroStrategy is down 2%. Cypher is down a little bit. Hut 8 Mining is down. Marathon is down. Coinbase is down. CleanSpark is down. Robinhood is not down. And again, one of the reasons Robinhood is green is because the market has to reconcile with the fact that they have $1 billion that they can throw out at any moment. You take Robinhood back to 16, 17, congrats. You just gave Robinhood 50 million shares basically for free because they know they're not worth $16 or $17 and they're going to buy back their stock. So now when Robinhood shows weakness or when, crypto's kind of weak, the market has to really think, all right, do we really want to, tank Robinhood with the rest of the names? Because if we tank them, we know what's going to happen. Like they have a missile that's loaded at us right now, and they're going to shoot the crap out of us if we sell off their stock because they're just going to buy up the dip, and they can do it to the tune of $1 billion. Their market cap is 18 billion. So and really the enterprise value is 13 billion. So Robinhood can buy 7.6% of their enterprise value, and they can buy 5.5% of their market cap. It's a little scary, if it gets that low. So I think the market has to deal with that as well. Oh, Bitfarms as well. Bitfarms is up 2.35%. So again, Bitfarms, they almost got acquired, or they had an offer to get acquired yesterday by Riot, and they rejected it. So the market's a little excited because they think that Bitfarms probably thinks they're worth a lot more as well. The TA isn't good for Hood though, double top. Okay, so I've seen everyone disagree with that, Daniel. The TA people that I follow on like Twitter and StockTwits, they've been saying the TA looks amazing. I'm gonna see if I can pull up a chart later in a bit, but like the TA people that I've been looking at that are looking at the tech, they're like, no, dude, this thing's heading to 35. Like that, they're saying short-term 28 is very achievable. And then once it breaks out of that, we're looking at 35 on Robinhood. So maybe you're looking at a different thing. Again, I'm not the best at TA, so I could be wrong here, but I've heard different opinions on the technicals. Someone asked about PayPal. PayPal just announced a crypto stablecoin at 9 a.m. today. Is PayPal up? I don't know if that is good, or is PayPal... Well, PayPal's down, of course. Dude, PayPal can't get a break, bro. PayPal cannot get a break. Okay, so they announced a stablecoin yesterday. They announced some advertising business yesterday. They're going more deeper into advertising. I don't know what the market wants, dude. I don't know what the market wants. It's getting a bit annoying at this point, but I don't know. Maybe they just need to continue to have good earnings. I don't know. But I guess this is one we got to just wait and see when it comes to PayPal. But PayPal's still down today. For those that are just joining, there was a new Palantir news this morning. It's in the timestamps of the video. They announced a deepening partnership with Eaton. A lot of people have been a little annoyed that Palantir hasn't done too many partnerships, or Palantir hasn't talked up over the past really over the past 2 months. We haven't gotten a lot of it's been since earnings, which was only 2 weeks ago. We haven't gotten some big partnerships, but here you go. Palantir and Eaton, they partnered today this morning, deepening their partnership. Eaton is a $134 billion company, and Palantir continues to deepen their relationship with a company like Eaton. UiPath is today, CRM is today, and C3 AI is today. So Eddie Blaze, I see your comment that UiPath earnings are today. Yes, we will cover their earnings today, and we will discuss that later on the market close. But there's a bunch of companies that are reporting earnings today, which are really important as well. PayPal, Sofi, and Shopify can't catch a break. Yeah, all three of them are heading. And Shopify, I think, is good, but the valuation, one can argue. I looked at a lot of different metrics for Shopify. You could argue Shopify's fair value is closer to 45 if you really, but I think it's going to get there? No. But it's definitely not going to break out if the valuation is a little bit stretched. Sofi is Sofi. I mean, management just has to figure out how to make a catalyst for it. And then PayPal's the one that I don't understand. I really do think PayPal's undervalued. And I think their earnings were phenomenal last quarter. So I don't know what the hell the market wants. But, I guess we're going to have to wait and see until the market gets more excited for something like PayPal. Okay, let's take a look at this. So we talked about a bunch of things. Oh, here's that thing about Celsius that I wanted to show you guys. So we figured out why Celsius is down. It's because of some health issues. So first, let's watch a little bit of this video. I played this yesterday. Let's watch a little bit of this, and then we'll look at the chemicals that have Celsius that are the reasons for why Celsius is potentially not the most healthiest energy drink.
This energy drink, and those who use it typically drink it because they need a boost throughout the day. Well, on the side, it says to not drink more than 2 servings per day. And Shay Cox did not follow those directions, and it landed him at UAB Hospital.
Very fatigued. I was extremely yellow. I turned very jaundiced. And I had no appetite whatsoever.
Shay Cox says he recently came to Birmingham this month to seek help from UAB doctors because medical professionals in Chattanooga could not figure out what was wrong with him.
My liver blood work kept rising, and we had no answers whatsoever.
That changed when he told doctors he added a new energy drink to his regimen.
I was drinking 1 in the morning before I go to work, and I would drink 1 in the afternoon. And we came to the conclusion it's potentially the green tea extract in the Celsius drinks.
Cox says that ingredient could have cost him his life.
I was told that my case is very severe, and I was in acute liver failure.
Certainly caffeine can predispose you to have abnormal heart rhythms.
Cox says it's going to take him several months to get his liver back to normal.
Okay, so that was the thing that went viral yesterday. And then this girl said, Celsius says cyanocyanoclobamine in it, which is essentially a synthetic form of B12 derived from a cyanide molecule. People with renal issues can get aluminum toxicity, among various other illnesses, due to the crap they put in it. Far from a weak bloodline, bitch-made problem, because a lot of people were calling this guy a bitch for like drinking 2 Celsiuses and going to the hospital. This girl is saying actually it's filled with cancer, and if you keep drinking it, you're going to die. I'm not a medical expert, so I don't know if what she's saying is right or wrong. It sounds like she's right, but I don't know if it's that big of a deal as what she's talking about. I really have no clue about the biology or the chemicality. I just made up that word, but that word is fire. I don't have any understanding of the chemicality of this drink. All I care about is how it impacts the stock. And so far, it's not been good news on the stock. So there's 2 things that are affecting the stock. One is the Nielsen ratings showing that the store sales are down to 39% week over week, which has not been good for the stock because it's priced in to be growing a lot. Wow, it's below $80 right now. Celsius is 79. And if those same store sales go down, when you're half the market cap of Monster, things are going to get, the market's going to be like, well, wait a second. Do we really, what are we buying here? And then 2, if this health thing is actually that big of an issue, which I don't know if it is, but if it is, then yeah, that can definitely create some volatility in Celsius. So I think the Celsius bulls have to ask themselves a question. Do they really think that this is a big issue? Because if it is, maybe it's a thesis breaker if like for some reason Celsius is so much worse than like Red Bull or Monster, which I don't believe it is, dude. Like it's hard for me to believe Celsius is that much worse than Red Bull and Monster. But the skeptic in me wants to say maybe the reason Celsius is growing so fast is because they put crack in it. And if it's growing that fast, one of the trade-offs of growing that fast is that they put some crack in it. Crack, metaphorically, they put some chemicals in there that are, from a chemicality speaking perspective, they're not that good for you. So I don't know. I mean, I've told you guys I drank Celsius before. It's disgusting. I've never thought this drink was good, but I've drank Red Bull before, and Red Bull actually tastes good to me. So I don't know. But so far, it's not good PR for Celsius. Let me know in the chat if you are buying the dip on this. I don't know enough about the chemicals to even think about getting excited about the dip. Now, this thing falls to 50, it gets really exciting. But at 79, I don't know. You could still argue that it's already priced in a lot of growth already for the next year. Abercrombie's up 15%. SoFi's down 2%. S&P down 0.68%. Nvidia now recovering a little bit. Look at those green candles. It was down at 1109. Now it's at 1123. So again, people are buying this freaking Nvidia dip. They are not letting the Nvidia dip go because they continue to want to get access to Nvidia. John says Celsius is gross. Yeah, John was on the live stream with me when I drank Celsius for the first time in February. They reacted to me drinking Celsius. They drank Celsius, and they also thought it was gross. But like, I've always felt like I was in the minority because everyone and their mother is like, we love Celsius. Celsius is the best thing since sliced bread. And so I'm like, all right, my taste buds are the issue then. I guess it's my fault. But maybe people are catching up to maybe it's not the healthiest. Granted, I don't know, dude. I hate even saying that because like we know energy drinks are not healthy. Like we know Red Bull, Monster, even soda is not good for you. So I'm perplexed by the idea that Celsius is so bad that it deserves this major health scare. But maybe it does. I guess we're going to find out more over the coming weeks. But it is a threat right now, or it is a concern you should have as a shareholder if you're thinking about buying the dip. If you do think there is a health problem with Celsius. Semlar Scientific now up 17% on the day because they bought Bitcoin. Incredible. That one continues to go higher. At the gym yesterday, I saw 4 people drinking Celsius. Yeah, well, here's the thing. No one's going to stop drinking Celsius. I mean, like, unless more people start like dying or something, which that guy didn't die. He just had some liver issues. I don't think people will stop drinking Celsius, especially if it's part of people's routine. But the question is it going to be hard to get new people excited if the PR is that bad? Which I just don't know, dude. PR, it lasts for a little bit, then it goes away. It's like PR is hard to think that it continues to be such a big issue. Let's get an update from Bernstein on why they're bullish on Nvidia. They still think it's inexpensive, and they think that there's more upside to go, which is why the stock continues to run. So let's hear from them and what they're thinking about Bernstein, and then we'll keep moving from there, or what they're thinking about Nvidia. Here we go.
Do what it is doing. What is your reaction?
I think you have to be there, right? I mean, I'm not surprised that it is doing what it is doing, right? We had the numbers a week or two ago, whenever it was. Clearly, the demand for their products is still off the charts. You've got a product cycle that it's on its way. They took the air pocket transition risk out.
Mm-hmm.
What's not to love?
I know, but at some point, like when I talked to you the day of earnings, pre-number, we were, I think, at 950.
That's right. And I think I told everybody to sort of relax.
You did.
Right into the frame.
You did. You said it was going to be, I think, mundane.
Yeah.
I mean, it certainly wasn't shocking.
I mean, to be fair, like
maybe it was. I don't know.
The numbers were, they were a good beat. They were probably in line with sort of the whisper numbers.
Yeah.
But they said 2 things that I think were really helpful. One is, again, they took that air pocket like transition risk as you go from Hopper to Blackwell. They took that off the table. And then number 2, I think his commentary on the pace and timing of the Blackwell ramp, their next generation product, was very supportive. People were thinking it was coming next year. He was pretty clear. We're going to, what was it? Said we'll see a lot of Blackwell revenue this year, I think was the quote.
Did you expect that?
I expected it next year. It was earlier than we thought. So at least in terms of like getting material amounts of revenue, that was earlier.
Is that one of the reasons why you raised your price target?
Well, and our numbers went up materially. So it was both of those reasons. But yeah, but it drove the numbers.
But what do you do when the stock continues to outrun you? You know what I mean?
It's not outrunning us yet.
But I mean, it's on the verge of outrunning everybody and everybody's price targets. So, so how do you handle that?
Again, I think we've had this conversation. Where don't get too hung up on the price targets.
I know. I like price targets. I mean, the price targets matter. People look at the price target and they're like, okay,
they do. People don't update their target prices every single day. For now, I think you can let it run. Though I think that the story is really good. The numbers are going higher, and the stock. Remember, it's not like it's expensive. Like if the numbers come in anywhere close to where I think they can come in, the stock is very inexpensive given the growth trajectory.
What is the risk at this point?
Yeah.
Now the stock's at the highs of the day. Okay, it's up 7.2%. As we're having this, another $76 today.
Yeah. Look, I think in the near term, like there's not a lot of like negative catalysts that are on the way. Again, we know the numbers are fine for now in the near term. We know the product cycles are coming. Computex is next week. Like I don't know if they'll talk as much about data center or Computex. It would be a little weird for that, but.
So basically, Nvidia is going to keep growing, and they're not going to stop. That's the gist of it. And Bernstein manages $750 billion in assets. First of all, they see Bitcoin going 150K, and they also see that it seems like there's no stopping Nvidia this year. They got rid of that air pocket transition risk as well, in terms of like what the transition would be like going from one chip to another, by Jensen saying one line, hey, we're going to see Blackwell revenue this year. That immediately took out the risk. They raised the guidance, and the street's like, okay, so what should we be scared about when it comes to Nvidia? Like literally, what do we have to be scared about? And that's why we're seeing a stock that's up 130% year to date, up basically 20% after earnings. Okay, Palantir's at $20.80 right now. Chris has a good comment right here. Palantir's looking to be wedging into a decision point. Either we're dropping into 19 or heading back up. I would be it would really be interesting for me if Palantir drops below 20, because I've been on record saying I don't think that's going to happen, and maybe I'm wrong. But if it does happen, it means there's some serious weakness in the market's ability to fathom either Palantir's growth story or Palantir's valuation right now, which I think you could argue is fair. I do think it's a little misguided, but I think the market's seeing Nvidia go up like 400% on their net income, and they're like, well, Palantir is not growing that much, and Palantir is an AI name, and the average investor is like, well, if it's AI and it's not growing as much as Nvidia, why would we not just buy more Nvidia? And I think that's the thing Palantir and every other SaaS play is struggling from, which is why maybe we might see below $20. Look at Snowflake, down another 2% today. The difference between Snowflake and Palantir is Snowflake's down 40% year to date. Palantir is actually up 25%. So that is the difference in their stock prices. But Snowflake's down as well, because I think the market's thinking Snowflake and Palantir both trade at PEs of over 150. Nvidia's at a 40 PE, and it's like they're about to do a split, and we know it's guaranteed that they're going to do 28 billion in revenue, and they're probably going to beat on that number. So it's kind of like, why would we not buy Nvidia that's growing faster than these companies? That's like the epicenter and the pinnacle of AI, versus Snowflake that's trying to convince us they're an AI name, and then Palantir that is an AI play, but they're not really showing the growth to justify how big of an AI play they are. I think that's what's going on right now, to be honest. And that's why the stock market is, or that's why Palantir is relatively flat, which is fair. Palantir is going to have to grow out of it and really grow into the valuation and prove that the growth is real. And look, that's kind of what we're paying for when you're investing in a company that's sub 50 billion, right? If you really want to sleep well at night, then go buy Microsoft and have no worries. I sleep like a baby with Palantir, but it's also because I think I understand the story here. The market is going to be volatile in the mean term with it. If we fall below 20, I mean, dude, that would be exciting. That would be a dip that I think is stupid, and I think it's gonna be very hard for the market to actually let it fall below 20 unless the S&P takes a nasty tumble. But if that happens, Snowflake's falling below 140. Datadog, let's look at the SaaS names right now. That's why CRM's earnings are going to be really important today, because they're a big SaaS name. Yeah, look at that. Most of these guys are not having the best day. Snowflake's down, Datadog is down, Oracle is down, Atlassian is down, Mongo's basically flat, Adobe's up a little bit. Adobe has not recovered since their earnings. They fell from 530 to 480. They've basically been flat. And I listened to the Adobe earnings call last quarter. It was horrible. They were like, what's your generative AI plan? And the guy was like, we're going to have people type in words and photos are going to pop up. And the guy was like, can't OpenAI do that? And he was like, yeah, but we're going to be better. No, it was worse. His excuse was like, yeah, but they can edit it on Premiere and Photoshop. So that's why we're better than OpenAI Sora. And in my head, I'm like, dude, who the fuck is going to actually edit it on Premiere? Like unless you're a professional movie ed, no one cares about Premiere to edit. Dude, Premiere is like 10 gigabytes on your computer. It's like, that's a heavy piece of software. If anything, most people are going to go to Canva. It's going to be a tailwind for Canva. By the way, Canva had some big event yesterday as well. They were talking about all the new features they're shipping. So Adobe has not been able to maintain its premium. ServiceNow, I think they had a decent earnings, so they've been okay. Zscaler has been down. CrowdStrike, again, they've been good. They've got the cybersecurity premium that the market's wanted. They got upgraded yesterday, like $420. And then Twilio's tanked this year as well. So Palantir even being up 25% year to date, given how tough it's been for SaaS this year, it's actually pretty interesting. And if they can have a good earnings next quarter, hopefully that continues to happen. D Visual Arts says, I'm an editor, chill. Well, if you're an editor, then yes, you can use Premiere. But the Adobe CEO was like, oh, well, the tailwind for generative AI for us is that people need to edit the videos. So if they type in girl on a horse on Adobe's generative AI product, they're going to like get that video. Then they're going to want to edit it, and they're going to put it into Adobe Premiere. So then they're going to pay us $30 a month to do. And I was like, dude, you're literally talking nonsense. Like, no one's going to do that. Like no one's going to buy a $30 subscription to edit a 5-second video. They just want to tweet it or put it on Instagram. They're like,
like Hollywood's going to pay for it, but Hollywood's not the majority of people, right? So I don't know. That's why I haven't even looked at Adobe seriously. I'm like, I don't know what their generative AI plan is. I really don't. I don't know what it is. So that's been some of the issue with the SaaS names and the quote unquote generative AI SaaS names this year as well. DaVinci is amazing. Yeah, DaVinci is another one. DaVinci is really good as well. So that's I don't know how much competition is for Adobe, but it proves Adobe's not the only AI game in town. I mean, look, let's do an example right here. Let me show you guys my Canva. So I pay $13 a month to Melanie Perkins, who is an absolute phenomenal founder. She's awesome. And let me show you what I do on Canva. So this is my Canva. This is one of the thumbnails I was making with the Matt Hogan interview. So if I go to Elements and I press AI image generator, okay, we're gonna type in girl on a horse eating a cookie. Look at that. Within about 30 seconds, we're gonna get something. And if that's better than whatever Adobe comes up with, I mean, look at this. There you go. Boom. I mean, like, I don't know if Adobe's going to be that much better, dude, or justify. Look at this. Girl on a horse eating a. This is insane, dude. This is insane. This looks like something someone could have painted, bro. Like, this is wild. This is incredible. We're actually living through this time right now. Like, so like, I don't know. Is Adobe going to, and this is real. It doesn't even look like her teeth are messed up. I don't know. She needs some braces. But outside of that, like, so I don't know if Adobe's going to be that much better than this. And if they're not, then I don't know how competitive of a moat they have to keep doing that. But we'll see. We'll see. That's the issue I have with Adobe. But all SaaS has struggled this year. Palantir has not done that bad. Roku's hit a 52-week low. I am waiting for the day Kathy capitulates on Roku and just says she admits defeat. So Roku now 55.46. Let me show you guys this tweet that Gergevin posted yesterday. It's a little bit of a misleading tweet, but he does have a point. So Kathy Wood, everyone has heard Kathy Wood talk about Nvidia, right? This is when Kathy Wood sold Nvidia. This is when she sold her remaining position right here. This is right in the middle of 2023. And as you can see right here, these sells were, look at this sell, dude. On August 2022, she sold 289,000 shares of Nvidia at about $182. She bought 134,000 of Teladoc and 168,000 of Twilio, and then Nvidia, which we all know what happened with that, 626,000 shares. Then she sold another 323,000 shares on November 2022. This is like really when Nvidia was bottoming, the market was bottoming, right? October 2022. She buys 133,000 shares of Zoom, 27,000 shares of Tesla. That's not done well. 114,000 shares of Twilio. I think Coinbase has done well from there. And then 291,000 shares of Roblox. So it's a little misleading because technically Kathy Wood bought Nvidia in 2014. I think she bought it at like $25 a share. So when she sold that at 180, she still did make a great return, right? She made a phenomenal return from 25 to 180. The problem is her argument was that Nvidia is not innovative anymore, and that the only companies that are innovating are the software plays that are going to benefit from Nvidia's GPUs, not Nvidia itself, which is not a horrible argument. The problem is it became pretty damn obvious that maybe that's going to happen a couple years from now, but at least for the foreseeable future, which including the past 2 years, Nvidia, it's been Nvidia's world and we're just living in it. And she had a lot of Nvidia. That probably would have saved the entire ETF, even with Tesla and Roku and Zoom and Teladoc, and she's selling out of Teladoc now, if she kept Nvidia. I mean, it at least would have kept the ETF green for the past couple years versus red. So it is tough to see that type of a sell. But she ended up getting rid of that and got into Nvidia and Zoom and Teladoc. And now the worst part is, dude, and again, I love Kathy, so I'm not trying to shit on her here. We're just analyzing, she's a public person. She shows her buys and sells publicly, so we have to analyze it. Now she's getting rid of Teladoc. And that's really crazy to me because I don't know how much money she had in Teladoc, but Teladoc was like a top 5, top 10 position. And now she's liquidating it at the bottom, down 90%. And it's just tough. Like, because she did that on Spotify before. She did that on Palantir. She got back in it after a couple years, but she did that. She took a $400 million loss on Palantir. And it's just like, you kind of ask yourself, like, yo, what is going on here, bro? Like, I don't even blame Kathy. I blame Brett Winton. That's who I blame. I don't trust that. I would not trust that guy with a penny of mine. I don't like that guy. And it's nothing personal, but I think there's a level of arrogance he has for being the chief futurist of that fund. And I think, and dude, watch one interview with this guy. It's really not just me. Let me know if you think I'm wrong on this, but I watched an interview with him. Sofi and ARK did an interview the other day about their new venture fund, which I think is a pile of horse shit. I think it's a pile of horse shit that ARK is trying to prey on investors for their special SpaceX OpenAI ETF. Like, give me a break, dude. Like, I don't like that they're trying to get investors to think they can have access to all these private companies via that ETF. But they did a joint interview with Sofi. By the way, I think I was right. 8 months ago, I said the only reason Kathy's buying Sofi is so that she can pitch her ETF on Sofi. That's literally why she's buying Sofi, dude. If you think about Kathy's thesis, why would she buy a bank? There's like literally no reason. The Technisys and Galileo aren't even growing that much to make it like a super big fintech. The reason she bought it was because it's pretty obvious. It was kind of quid pro quo. Hey, if we buy 10 million shares, we get to pump our ARK ETF on Sofi to a bunch of retail. And it seems like that's what happened. It seems it seems like that's what happened, dude. There's no other reason I can justify Cathie Wood buying Sofi outside of her wanting to pump that ETF. They probably asked Robinhood to do that, and Robinhood was like, no, you can go see your way out the door. We're not going to pump your ETF on this thing. That's my assumption. But the point is, they had this interview with ARK, right? And Brett Winton was talking in this interview, and the level of arrogance of this dude. He was like, "Oh yeah, well, you should invest in the ARK space, the VC ETF, because all these startups, they want us on our cap table. Like they love having Cathie, they love ARK, they love our name, our brand is everything." I'm like, dude, your brand? Are you kidding me? Your brand? The brand that's selling out of Teladoc down 90%? Are you saying that brand? Like it's like they think they're so smart with their research because they got Tesla right, which they did, by the way. And again, no hate to ARK. It's just the way they conduct themselves in regards to how they think of their research versus the NASDAQ, which just bet on like big tech, which ended up being way more innovative than anything Cathie has invested in, including Tesla over the past couple of years. It's just like to have that level of arrogance just means it's a guy in a Patagonia vest, literally a guy in a Patagonia vest, soaking up his 2% management fee on $6 billion. And living his life with no care about the fact that their research sucks. It literally sucks. So that is my gripe with ARK. And again, I love Cathie. I think she's an awesome person. But my gripe with the fund has been like, dude, they're pulling in retail and they're not pulling up gains that are exciting enough to get retail excited. Tanner says they have Figure as well. Yeah, they do have Figure, and that's fine. But again, my biggest problem with the VC ETF, same thing with the Destiny ETF, is that you're convincing investors that have no idea what valuations they're buying Reddit or Discord or any of these companies at. And you're saying, oh, well, you just need exposure to this private markets. It's like, no, you don't. No, you don't. There's plenty of public stocks that you can get exposure to that are probably going to do way better than a lot of these startups that are going to fail, or these startups that like buying Stripe at 95 billion. Sorry, not a fan. Not that exciting, dude. I'd rather buy Dix at fucking 15 billion than Stripe at 95 billion. At least I get a dividend and I can see some cash flows. I don't even know what Stripe's revenues are. Like, I don't know any of this stuff, but the VC funds in these public ETFs are like, well, you get exposure to Stripe and Stripe is innovative. I'm like, yeah, but what's their free cash? Like, are they even profitable? So I think for retail investors, it's not the coolest thing. And I don't like that they're pumping it like that. The research is fine. The way they allocate it. No, I disagree, dude. I don't think if the research is fine, they need to have more wins than Tesla. Name me one company that Cathie has won on besides Tesla. Yes, you can say Coinbase, but they started buying Coinbase at $400. So the average on Coinbase, it's not like they had a $30 average and they're up 7x. Their average was closer to 250, 300. Palantir, I'm not going to count because they didn't do any research on Palantir. I did the research on Palantir. They fucking watched my videos. I give ARK zero credit, especially when they sold out of Palantir. They did no research on Palantir at all. I did the fucking research. No, I'm just kidding. But like the point is, I'm not giving them Palantir credit. I'm not giving them the Coinbase credit. I'll give them Robinhood, but Robinhood, it's less about Robinhood. It's more about they were trading at cash, dude. And by the way, they were buying Robinhood at $70 a share. So like, can you really give them credit? I don't even know if their average is that good on Robinhood. So besides Tesla, what win do they have? That's a problem with allocation? No, that's not a problem with allocation. That's a problem with their research. If their research suggests that Zoom, Teladoc, and Ginkgo Bioworks are the next big innovative tech companies, wow, it's at 59 cents. Oh my God, Ginkgo's going to get delisted, dude. Cathie has 200 million shares of this company. It's going to get delisted. This is ridiculous. If their research is telling you that these are the companies to bet on, I think that's a problem with their research. That is not a problem with allocation. That has to be a problem with how they're actually doing research. Because they could easily allocate to like
Nvidia, Apple, Amazon, but then they don't have the moat of research because then they're not differentiated from the NASDAQ. So how are they going to raise the money? So Kathy kind of put herself in not the best situation by saying we're so high growth, innovative, different, and she raised all this capital. This is what I would have done if I was Kathy. I would have used the innovation thing to raise the money, and then I would have just invested in the big seven. Literally, I would have taken, at one point, she had $25 billion under management. I would have taken all that money. I would have sold, in hindsight is 2020, right? So I'm sounding like a genius right now. It's hard to do this, but I would have taken my losses or sold in 2021, 2022, even early 2023. And I would have been like, you know what? Zoom is a pandemic play. Teladoc's a pandemic play, but Amazon's not going anywhere. Microsoft's not going anywhere. By the way, these are pretty innovative. Dump it into the NASDAQ and then take some small speculative bets on the Rokus and the the blocks of the world, etc. But I would have put it mostly into the Mag 7 because those are the more innovative companies that are happening. But instead, the research suggested otherwise, dude. And so that is the issue. Thomas says, well, research tells you if a company is innovative, allocation is buying those companies at a ridiculous valuation. So I would suggest it's an allocation problem more than a research problem. I agree with that. I get your point. But I think Zoom, Teladoc, and Ginkgo Bioworks are not innovative. So even the fact that they allocated a penny to those companies, I mean, dude, Zoom was a pandemic COVID play. Like it's growing 1%. Literally, we went through the earnings 1.4% year over year. If they're allocating just to these names, then the research is suggesting that they're innovative, but they're not innovative. Then the research is bad. The research has to be bad. So I don't know, dude. I don't know. That's my little rant on. And I didn't even mean to go on a rant on Kathy and ARK, but like when you look at something like Ginkgo, dude, this thing's down 95%, and she has 200 million shares of this thing. Gene says, "There goes the Kathy interview." Send a link if you got 5 minutes to spare. Yeah, Tanner, I'll send it to you. I'll send it to you right now. All right, so we'll have Tanner join us. So here's the thing about the Kathy interview. If I can't tell her this stuff to her face, I don't think I want to do the Kathy interview. If I can't say, "Hey, Mrs. Wood, like Ginkgo Bioworks is down 95%. You own 200 million shares. Teladoc." Like if I can't read the list of stocks I just read just now and say, "Hey, where's the innovation here?" I don't want to do the interview, dude. Like I don't want to. By the way, I asked Vlad hard questions on the interview. I said, "How the fuck do you afford this 1% match? People are calling you the next FTX. They might think you're going to go bankrupt. GameStop, how the fuck are you going to get people's it's not like it was a rosy daisy interview. Like I asked, even on the interview call where he came on my channel, I was like, bro, the street's not buying this shit. They don't think this crypto thing is sustainable. How are you going to deal with this? And so I feel like I asked some decently hard questions. I would want to ask some hard questions to Kathy, and I think she would appreciate that in general. I don't think she wants me to just say, "Oh, how'd you get Tesla? Tesla's amazing." I will ask that question. We got to ask the good questions, but I also want to ask some hard questions and try to get her perspective on all that stuff as well. All right, we got a friend of the channel, Tanner, joining the show. Tanner, what's up?
How's it going, man?
It's going really good.
First off, I just heard that part about you being able to ask the hard questions. I think that's super, like a great way of thinking about it. So good up to you being able to essentially try to put Kathy in her bullshit, investing in Zoom and Teladoc and all this stuff while talking about, certain industries that she's investing in that are potentially $8 to $10 trillion valuations, and then throwing it into online prescription services that suck. So I completely agree with you. I think that there's a thing that you're missing though. With Kathy Wood, I do actually believe that a lot of the research is like top notch. Okay. And I believe that a lot of companies, the problem with the Brett Winton thing that you were talking about was that companies want them on their cap tables.
Yeah.
That is definitely true.
Yeah.
Okay. They definitely want Kathy on their thing because they know that she's going to slap some $8 to $10 trillion market cap, and then they can use that research to go and get another round of funding. So I do actually think that's real. The problem is that she has all this writing and all this research and then pours it into trash, which is not a problem of research. It's, I don't know who the investors
but
are there.
That's what I'm confused about. How is it not a problem with research? If their research tells them Zoom is innovative, don't you think that's bad research?
Well, I think that it's multiple teams. I think they have a research team, and then they have a company that says, okay, well, this research only goes so far at certain valuations.
I know, but don't you think the research team is stupid if they think Zoom and Teladoc are innovative?
I don't think that I think that they think that those companies are slightly innovative. I still think that they
Zoom
believe
is innovative.
What?
You think Zoom is innovative?
I mean, they're not like, dude, I would not invest in Zoom. I think they're growing at like 3% or something like that. But like, I do believe that they can see a way that meetings are going more online, or that there could be like Zoom could create an operating system that is, refreshed versus the normal Microsoft Teams type bullshit. So like, I don't know.
I think you're overcomplicating.
Zoom. I'm not a fan of Zoom. I'm not a fan of Teladoc.
I think you're overcomplicating it. We know those companies aren't innovating. Like, we know that they're a pandemic place. If they're not innovating, then my question is, the research team that suggested to Kathy, hey, we should look at this, they're innovative, they were wrong.
I think the problem is you're not giving them any credit for Tesla, Nvidia, Palantir, these sort of companies. I mean, maybe they watched your YouTube videos, but they did make plays on them. The problem is the allocation.
Tanner,
they're cutting trades that they know are in good companies.
Tanner, you can't give for Nvidia, they sold before this thing goes up 5x. So yes, they made money, but like, they did not really reward shareholders for being part of the ARK ETF. If like, you don't sell something that's about to go up 5x.
That's an allocation problem. They're not good investors, but they are good. They knew that the semiconductor business was going to be a massive, like they were talking about in their big ideas reports for multiple years in a row, and then they just didn't invest in it. So
no, but hold on. If they sell, you're saying it's an allocation problem. They sold Nvidia at 150. I'm saying no, that's a research problem, because their research.
No, they knew it was going to be
let me explain. Their research said, hey, third order derivative software applications are going to be the beneficiaries of all the GPU compute. They were wrong on that. So far, that has not happened at all. Like those companies, like Palantir's not up 10x yet. Palantir should be one of those companies, right? They're not up. Nvidia, for the foreseeable future, is going to keep being the big daddy in this race. So they were wrong on their research to suggest that Nvidia is going to fall off a cliff and we need to sell out of it. Yes, they were wrong on allocation, but also their research sucked, saying that, oh, semiconductors are done right now. It's like, no, they're not. AMD, Nvidia, On Semiconductor, Lam Research, all these guys are continuing to keep moving. So I think that's a research problem as well.
I mean, maybe you're right. I just and I agree. Even on the Brett Winton, Kathy Wood, Sofi thing, they said that what was it? Autonomous driving was going to be an $8 to $10 trillion industry in 5 years.
Which might happen. You never know.
It won't happen.
Okay,
it won't happen.
I'm giving them more credit on that one. I like, my thing is, look, they got $10 trillion. I mean, dude, if Elon pulls off this FSD, maybe, I think it's a stretch, but at least I'll give them some credit that that's like believable to an extent. It could be that big, maybe not that quick, but I'm giving them all the credit in the world on Tesla. And I'm trying to say, outside of Tesla, and even, I'm curious what you think, what is the other name they've gotten right from a research perspective? Because I can't find any that they've gotten.
I mean, I would name the names that you're not giving them credit for.
Well, you can't say Palantir, because they got in that after they take a big loss. So yes, they're in, but they have to make up $400 million in gains just to break even.
I'm not like, I think that the thing was, or the part that we're disconnecting on is that I think that the sectors that they thought would win are winning. The companies that they bet on sucked. Okay.
Wait. What do you mean? What sectors do they think would win that are winning?
Like AI, autonomous driving, electric vehicles, like these things. I still all believe in all of their futuristic plays, right?
Dude, but I don't buy that, because everyone's betting on AI. Like, it's not like they found this sector hiding in the dirt. Okay, I get you.
They were talking about artificial intelligence way before ChatGPT, which was really the breakthrough moment where everyone realized that that was a real thing. That was not common before.
Okay, but here's my question. If they were talking about ChatGPT before everyone else, why the hell were they not in Microsoft? If they were talking about AI,
an allocation.
No,
problem.
That is the research. Your research is telling you to go buy cockroach.com versus Nvidia or Amazon or Microsoft. If you think AI is going to be a 17 quadrillion market, and you can't tell that Amazon's ads are going to get better because of AI, that's a research issue, bro. Your team is researching the wrong AI. You're researching IA. You're not researching AI, bro. You got to.
Okay, bro. All right. Well, we can agree to disagree. But I still am very much a futuristic investor. That's why I named the channel after that. Some of their research and the places to look were right. Okay. I think that their big ideas reports each year are a great read. They're a great way to look at different industries, but where they put their money has been not great. So to say that, all of these amazing industries are going to 5-10x and then continue to hold on to Teladoc and Zoom, probably out of reputational hit. They just don't want to take the loss.
Yeah.
So they're just slowly trimming out. But man, they just have to bite the bullet and get rid of that shit stuff, because to have an innovative, ETF and then buy companies at some of the highest allocations for 3% increases in revenue or whatever Zoom was. I read the report or just skimmed it, if I remember correctly. But yeah, it's a total value play. So I think that they're saying one thing and doing others, but I like what they say. I'm not anti what they're saying.
Yeah, and I agree, dude. I got into Cathie Wood a couple years ago, and I loved like reading a lot of the stuff. I read a lot of the white papers they put out. So I agree. The research is good. It is, I guess, just a question of the allocation, and some of the research to me gets a little weird given some of the names they pick. What do you think about this buyback, dude? Talk to me. $1 billion. You are a Robinhood shareholder now. How are you feeling about this?
Thank you. I appreciate that. Appreciate you consistently staying on this name. Eventually, I changed my mind. I think it's good. I think that you have brought up a really great point that not a lot of bulls have the stomach to do, which is to say that this might not be all sunshine and rainbows, right?
Yes.
That if you're doing this, you're in full growth mode. Why? However, the extent in which they put this out 2-3+ years starting in Q3, I actually think it's decently small and very affordable for them to do. They're going to make up that money within that interim. So, yeah, I don't actually think it's a problem at all. I think it's great. Happy I'm a part of this company now. And I liked your views on the them trying to take over what TradingView is doing. I was trying to think of what they could do with the desktop versions and more sort of research. And I thought that was a good view, bringing down the cost of investor tools, which they could totally do. It's not like TradingView doesn't need that cost. They just are holding up high margins, and those margins are Robinhood's gain. So
you think the $1 billion isn't necessarily they don't know what to do with the money? You think they kind of are just sitting on too much cash? And
well, one, that's always been a problem with Robinhood. It happened to be the day that they announced it was the day that we switched from Trade Plus 2 to Trade Plus 1.
Oh yeah.
So potentially their liability, their collateral for Frenzy has gone way down, and they actually don't need to hold as much cash. It happened the exact same day.
Right.
So that was the problem with the GameStop thing, why they took away the buy button. If people don't remember, they had to consistently put up a large amount of collateral just to make sure that those trades do go through. So that partner, I forget what the partner's name was. They worked with Citadel all the time. That was the conspiracy. Yeah. They wanted them to post $3 billion in collateral. Robinhood didn't have it. Well, now with Trade Plus 1, you're essentially cutting that liability in half. You will only need to post for each day, not for multiple days. So yeah, maybe they don't need as much money.
Okay, I got to get your take on Sofi because you're here. So I got to actually watch the Sofi podcast. I watched a bit of it with that Danny Deals guy who came on, and that was hilarious because for anyone who hasn't seen the weekly episode, you got to watch last weekly. It's on Tanner's channel. I'll put it in the description. But literally, the dude was just like, all of you need to calm the fuck down. Like, this is a great company. Things take time. You're not going to get your gains in a year or 2 years. And if you have to sit on a stock for a while, that's okay. How are you feeling about people that are complaining that it's not going to the moon? You are a long-term investor. You don't really do options. You bet stocks for the long term. So I guess two questions. One, what do you think about the state of Sofi right now at this price? Two, what do you think about holding it? And then third question, what do you think about Noto buying a crap ton of shares?
I mean, he buys any time that it's under $7 a share. So that I think that's going to continue if the price stays under. He also just found a good influx of cash because SoFi bought out all their preferred shares, and he had a portion of those, so he actually got a pretty good paycheck. So now he's just pouring it back into common shares again. So yeah, he's buying back, happy. The thing is you need to look at Wall Street's estimates for SoFi, and do you believe that SoFi is going to hit their long-term 2026 guidance, right? Every time that they've ever posted any guidance, aside from one time whenever the final moratorium date got pushed, right? Which, how could they have anticipated that? they have beat on revenue and EPS every single quarter. Almost a triple beat every single time, or a double beat, depending on whether you want to say that
They always sandbag, always.
Every time. And now they're saying their 2026 guidance is going to be between 55 to 80 cents of EPS for the end of 2026. Okay? Wall Street is saying it's going to be 44 cents. So they are greatly below the lowest point of Noto's guidance. And by the way, Noto said, the CEO, Anthony Noto, said that this is not inclusive of new product lines, not inclusive of geographical expansion, not inclusive of a macro improvement. Okay? They are banking on the macro staying the same in order to achieve that EPS target. That is some shit right there, man. So
basically, you're saying the street's underestimating their EPS estimates by 50%.
Yeah, like greatly. Yeah, they're expecting 67 cents in the midpoint, and Wall Street saying 44 cents. And every single time, if you go, Wall Street has always underestimated, their guidance, and then they improve as Noto ends up triple beating every single time.
Right.
There's an unbelievable short interest. I do not have all the answers as to why they're betting against this company. I think it's an easy macro play, an easy way to hedge their bets on the macro because they're a bank.
Well, let me say something, Tanner. The stock's been in the gutter, but when it emerges from this, and I don't think it's a if, I think it's a when, and because I went through this experience, so I can tell you what it feels like when you're stuck on a stock that's at $6 for a long time. You're going through a little bit of an extension of it, but I felt it as well. And it emerges from the ashes, and it's at 10, 15, 17, gets to 20. You end up being the guy that a lot of people respect because you were the only mother effer talking about it, you and obviously the guys on SoFi Weekly, when this thing was in the gutter. So I will say from a content perspective, this is actually not the worst thing for you because the longer it's down, the more you get to be like, I'm the only guy talking about this damn stock. And if Noto just executes, which he's doing, right, which is why you're saying, I don't know why the stock's down because Noto's doing what he does. If the market finally catches up, you're the guy, bro. You're the only guy left standing.
Yeah, there are others, but yeah, I'm just trying to show off companies that I like. Like I was looking at Robinhood and I didn't like it, and now I like it. And now I'm talking about I'll just talk about the companies that I'm enjoying, and I'm really trying to stick within the e-commerce and fintech space right now. Maybe one day I'll get the balls like you to expand and do a full market thing, because obviously I want to talk more about Nvidia and Shopify and all those other companies that I like so much. But
do you think end of year SoFi breaks out of the 6 range, and when the rate cut happens, that's when 9 to 10
I don't know.
likely? You have no clue.
I would have thought a rate cut came sooner. We continue to get bad data, and so they continue to post that further and further, and I think that will be really that'll be the nail in the coffin for SoFi's price targets. And so essentially what you're asking me to do is to do a rate prediction, and I'm not going to do that.
Yeah, well, that's fair. I think liquidity will help SoFi, and we need more liquidity in the system. And then I think 2 things help SoFi: liquidity, or the Technesis and Galileo really start growing. One of the 2 is going to help the stock a lot.
I stayed longer than I thought I would, so I'll just wrap it here, and then you're gonna have to let me go. But if you're betting on large product catalysts for SoFi, something like this, it's not coming anytime soon. I think it's sort of, they have their base. Maybe they add on small to mid-sized banking and large customers at Galileo and Technesis, which I heard your comments about SoFi's tech platform. They're practically growing at the same pace of Palantir, but yet you friggin' say that they're still growing.
It's not AI, bro. It's fucking B2B payments. No one gives a fuck about that. Like, you know what I'm saying? It's not AI, it's not LLMs, you know what I'm saying? No, I'm kidding. But yeah, it is growing at 20% year over year. I get, well, let me ask you this question to end it off. If their tangible book value is around $4 and it's trading at like $7, is the premium you're paying for the tech platform growth, is that how you justify paying higher than?
Everyone's saying that. Like, look at the largest banks in America. You pay a premium for them. Okay. SoFi is no different, because regardless of the tech platform, you are paying for a very fast growing bank. So forget about this idea that a bank should be priced at, book value. I understand that credit comes with a multiple sort of depressor, because there's a chance that the company can go bankrupt much faster than the idea of like Palantir going bankrupt or something like that.
Yeah.
But they are extremely fast growing. Okay. And that alone deserves a premium. You pay for future growth. So if you believe that they're going to go bankrupt, then you can bet against the company. But so far, I've seen them get on really high FICO, really high income users that are not going bankrupt. They are staying, they're paying their wages, and they've been able to sell their loans in an environment where that's been extremely hard. So I'm a fan of where they're going, in the long run. I forget what I was saying though before we got onto the tangible book thing. I wanted to, SoFi, the real catalyst will be rates. If you're trying to play this company for some sort of fast price movement in the short term, that's probably not your play. I'm sure there's other ones, like even Robinhood, much better for that sort of idea. They have products that are rushing out right now. SoFi is going to be a slow, steady, but a massive company in the long run. In my opinion, this is just for my portfolio. I appreciate you having me on though, Amit.
All right.
Yeah.
Tannor, the man. Thank you for being here. Guys, his YouTube is in the description. If you're somehow sub to me and not sub to Tannor, you have to be sub to Tannor. He does an awesome fintech show every single day talking about fintech. And even if you're not a fintech investor, it's important to get those insights because it definitely broadens your horizon. I mean, he got me into this whole fintech game just by listening to this fucking show every morning or every 8:30.
Well, thanks, brother. I appreciate the shout out. I'll talk with you later. I got some questions for you. So expect a DM later on. But anyway, see you later, guys.
All right. Sounds good. Thank you, Tannor. Bye-bye. All right, guys. I think we're going to end it off there. Nvidia. Wow. Nvidia's green. Nvidia went green. While we were talking, people were buying Nvidia. Celsius still down. Roku's down. Snowflake's down. SoFi's down 1%. DNA's down 4%. I still can't believe DNA is below 60 cents, dude. I haven't checked that in a couple of days, but there you go. Kava getting bought up a little bit. It was at 74, now it's 77. So the dip being bought a little bit there. DraftKings is up a little bit. See, DraftKings is green. I don't think DraftKings is going to be $36 in 3 years. So I'm looking at DraftKings a little bit more seriously. I think this is kind of a stupid dip. Does it matter that the regulations are hurting them? Yes, but does it matter that much? I don't think so. So I'll be doing more DD on DraftKings, let you guys know what I find. They're growing 80% year over year. So the company is phenomenal in terms of its growth. And I think they're profitable, or they're very close to profitability. So now it's just a question of seeing if paying the premium right now is worth it. Enphase 127, Apple 191, Bitfarms 223, Robinhood 2074, up 1.32% of the day, Amazon 183, and then the rest of the Mag 7 are red, Meta, and Google. Tesla's down a little bit. Nvidia and Amazon are up. Microsoft and Apple are up as well. Faraday Future still down 34% on the day. All right, cool. So that's it from me. Thank you all for being here. I'll be back on the market close 3:45 p.m. We'll have a lot to keep discussing and figuring out what's going in the broader markets. I'm going to go ride my bike now for 4 miles and work out my legs so that no one can say I have chicken legs. And we'll keep going from there. That's it. Thank you, everybody. Appreciate it. Have a great day, and I'll see you guys at 3:45 p.m. Bye, everyone. Have a good morning.